is ripping.
My tummy hurts.
Pretty good, right and bad.
Good evening, guys. Nick with Off the Chart Trading. I'll be doing tonight's nightly recap for Thursday, the 17th of February. If you guys hear screaming in the background, that's my 3-year-old and my 1-year-old as well. She'll be one on Saturday. I guess playing with my in-laws. They're playing with their abuela and abuelo. They just came in from Florida, so they're all playing. And right before I was just looking at some stuff, and I hear random screaming. So anyway, figured I'd give you that disclaimer that no one's being murdered in the background. Not that I'm aware of. One thing I was going to start here, but it just happened a few minutes ago. This is live breaking news as I'm recording this. I noticed all the futures were spiking on good amount of, I want to say good amount of volume, but price action wise, we went from being flat to being up almost 30 points here. And I just messaged Ed, and I guess he found the news because I literally just sat down to do this recording like not even 5 minutes ago. And it seems that our Secretary of State's going to be meeting with, was it Lavrov, whatever his name is, from Russia next week. So probably a good sign if they're going to have a meeting. They're not going to do anything for within a week. And obviously the markets are liking that as of right now. Obviously it's almost, it's already 9 o'clock almost. Sorry, it's a little later than usual. But anyway, late night action. So we'll see if this carries over into tomorrow morning. But definitely good news. And if anybody did end up going short today, we like to say they have poor location. So if this ends up reversing and basically taking out a lot of this intraday action, I wouldn't be shocked if we do end up seeing a decent pop tomorrow. Kind of changed a little bit of what I was going to talk about. And that kind of also goes into what I was going to talk about. It's such a news-driven market right now that literally, you could be like, oh man, look at the market. I got to go short. And then boom, out of nowhere, NQ up 100 something points, Dow up almost 200 here. And obviously it's live for me, but obviously it's depending on when you watch this. But just to see, 30 points on the ES instantly, it's crazy. And at almost 9 o'clock at night, So it's basically, I don't want to say 24/7, but the market conditions were in mix of the Fed. And then obviously these geopolitical issues that, it's red light, green light, oh, the troops went to the bathroom. Oh, they're leaving the border. And then, the next day, oh, they just had to use the bathroom. They're back on the border, and the market crashes. So it feels like a game of red light, green light, and taking out, the whole thing with Russia. Overall markets definitely feel more like it was in 2018 when the Fed was messing with interest rates and so forth. Just the way the market's trading, it's tough. And as a directional trader, there's not really much I can do because it's suicide. Yeah, we'll scalp. I made a little bit on futures today in the room. Nothing too crazy. I just took one trade. It was a good trade, and I just ended up calling it a day in a sense of intraday trading because in this market and learning from past experiences going back to 2018, that seems to be the best course of action. Are you going to hit home runs? Typically not, unless you're in the right place, right time. Like if you did lotto calls tomorrow and you wake up and the S&P is up 60 points, then yeah, you did well. But that's more luck than anything because obviously when it comes to news sensitivity, and that's the other thing too. I don't know if it's necessarily 2018 somewhere in it. It's kind of a blur when you look at this stuff every single day, but it reminds me a lot of the trade negotiations with China, the trade war or whatever. Like everything's like la 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 la, and then boom, your positions got obliterated in a matter of seconds. And God forbid you went to the bathroom and came back. It's just like you got hit hard, or you're in a position for a month and it's looking beautiful, and then within 30 seconds, it goes against you. So feels like I don't know if it was 2018 or going into 2019, maybe it was even 2017. I'm just mixing all of that together to basically say when you mix potential geopolitical and news and how sensitive the market is to that type of stuff, and then you add in the Fed and kind of combine it, it's almost like a perfect storm of basically fear and FUD and everything else, kind of the same thing we talked about in the last video. But I'm not going to really deep dive into too much. What I figured I'd do tonight is just basically recap the indexes and then kind of show what I did today. Other than that futures trade, there's not much to really look at. That was just shorting a little after the bell, making that quick, I think I made like $200, nothing too crazy, and then just kind of calling it a day and being happy with what you make, relatively quick. But let's take a look at the indexes, and then I'll show you guys what I bought, because I think it's good to have a variety of different stuff to look at, not just, ES is up, the ES is down, the ES is up. There's other things that you can be doing other than trying to either catch a knife or think is this the bottom, and then we end up reversing and so forth. So just trust me, from experience, you can get chopped, and it can get pretty ugly pretty quick. So best approach, sometimes I always say cash is a position. You just wait this out. I've been saying it since I think end of November, early December, that going into this year, especially with knowing, there's a wall heading in front of us, and there's a good chance we're going to hit that wall. It's nice when you know ahead of time, but as you get closer to that wall, it becomes more real. And that's kind of how the interest rates have gone. Now it's no longer just in the near future. It's happening, and it's relatively real. I mean, I should say realistically next month, around this time next month. So anyway, last video I talked about the squeeze actually looking pretty solid. Obviously, this is the candle starting from 6 p.m., so not much data. You only got about 3 hours of data here, but off of that news from the Secretary of State, decent follow through right now on the future. So we'll see how that opens up. We obviously got about 12 hours before we got to worry about it, but obviously today's action was not too great. I think the ES ended up finishing down about 100 points. And this just looks sloppy. I mean, that was an amazing candle, decent follow through. And once again, we're looking at a weekly chart here. And then I see a bunch of selling wicks, and I call this pattern, it's not the cleanest one, because typically you want this candle to be a little higher, and then this one being kind of, it's almost like you're switching the two, and then you have this one being a little lower reversal. I call it a Wolverine pattern, mainly just a Marvel fan, and when you see his claws, it's kind of a potential for a reversal. It works normally for us in the room, especially on a 15-minute chart, and anytime I see it, I call it out. Sometimes it's good at catching the dead lows of the day, or in this market, it's typically good for maybe 15 minutes to 30 minutes, but perfect for an exit or a potential entry, depending on which way you're going to play it. But a lot of indecision. This is the end of the world, and then, we end up actually reversing and having a pretty solid week. And then a little bit of, follow through, continuation, and then the last, this week and last week, more sloppiness. So it's tough, because one thing that I don't want to say it's an edge, but something that I try to do, and that's why I kind of have this open over here, is kind of visualize where, with the indicators you use, or just how, adding, market sentiment and what's going on and what you see, and the indicators you use, is trying to almost like you are, I don't want to say forecasting, but you're just trying to see into the future where these next candles will potentially go. And sometimes it's, maybe a 60-40 or 80-20 or 75-25, whatever the case may be, one way or the other. But because of all the, if Russia's no longer an issue and the Fed ends up being a little more dovish, then it would make sense for us to go back up, maybe 4650, 4700. I don't know if we end up getting back up to all-time highs relatively soon, but at least higher from here. The whole Russia situation gets worse, and the Fed comes out and they do 0.5, and they say they're, and then, April they're going to do another 0.5 or whatever the case may be. That's incredibly, probably more than the market was anticipating as far as the actual rate hike, not the amount of times, but the amount that they're actually raising. And that could spook the market, and we could easily end up coming back down. I'm not going to say March lows, but, look how far we've come in such a short period of time, literally coming up on 2 years. We had, price action wise, more than we've had in, years as far as that's concerned. So there's a lot of open space over here. So, the E is coming down to 4,000 or 3,800. There's a decent, case for that if everything ends up playing out. Potential, there's a lot of talk of recession. And it doesn't necessarily, when you hear the word recession, you think of the Great Depression, or you think of 08, 09, and 10 and so forth. And it doesn't necessarily mean that, it's just basically two quarters where GDP is negative or is not growing. So we could still end up, everyone could still be fine, but you could still technically be in a recession. And just using the R word, especially if the media gets a hold of it and runs with it, every other thing, the housing market and stocks and this and that. So, once it's and that's the thing, markets definitely drop quicker than they go up. So you could undo a year's worth of action. I mean, you undid, several months of action in 1 week. Going back to these lows over here from October or to end of September, he did that in basically 1 week. So it takes the stairs up and the elevator down. So anyway, so we're kind of right. What the point I was getting at is we're kind of like, I could see this happening where we do break above the 50, the 100, and slowly come back up maybe somewhere in here, like I said, 4650, 4700, and consolidate, and then just wait for whatever the next thing could be, the next catalyst. Maybe it's next earnings. Maybe everyone's waiting for supply chain issues to not be an issue. Maybe it's I think the big thing is the Fed and mix in inflation. But if inflation does end up, and for me, it was watching it more into the end of last year and the beginning of this year as a tell. If March and April's data comes in and it's still at 7.5 or 8 or something, then yeah, I think we have a more serious problem with inflation than I initially even anticipated. And that's obviously just my opinion. I'm not an economist or anything, and I don't read the books and follow the notes. It's just, just once again, just the shutdown and how everything worked. I don't know. It's a head scratcher. Here we are 2 years later and still having all these issues. But anyway, that's just my thing, is that it might change and get progressively worse overall in the markets if inflation is still running rampant, because then obviously the Fed has to act even more aggressive, making it a higher probability that we do enter some type of recession. So we'll just have to see how it all plays out. But take a look at the NQ. It's definitely going to look weaker for sure. Yeah, that weekly is kind of in that weekly squeeze. It was a low compression squeeze, but it's been in one since technically the middle of December, so 2 months, and it is officially firing short. I mean, it has till tomorrow. So if we do end up having a rally, maybe it ends up going back into a black dot squeeze, and then ends up, being a slingshot where you see yellow next week and it slowly heads higher and then ultimately fires long. But I don't put too much weight into the low compression ones, but just once again, a point of reference. This one does have a daily as well, kind of like the ES, but here you see the momentum is shifting red. So just something to pay attention to. So if the 10-year actually fell off today. I mean, it dropped a good amount. Got below 2% again, so that's something to pay attention to. I use the TNX as a gauge, so it's at 1972. So that basically means that interest rates for the 10-year as of the 4 p.m. close today is 1.97. So obviously the higher that goes, the more stress it does put on tech stocks, and obviously the NQ could get progressively weaker. So I've been shorting. If I am going to do anything intraday, it's normally been the NQ because of that sensitivity to everything going on. And it just looks weaker. I mean, versus the ES and some of these other ones, it just looks much weaker. From a percentage, from fall from grace or whatever. I mean, actually, funny enough, now that I'm looking at this with you guys, I mean, I talked about that weekly squeeze finally firing short, and we are 3 dots into it. So realistically, it could go, I mean, obviously anything can happen, but it is climbing back. You see the selling pressure on those wicks, but ultimately each candle over the last 3 weeks has closed higher. So that's actually, the Russell's actually looking pretty good. And there's a camp that believes small caps kind of lead the market. It let it down initially. This is almost like a warning shot because, everything was hitting almost all-time highs or doing really good in towards the end of November. And this was kind of hitting the highs the first week. So it was almost like a 2-week notice that there was potential for selling. And then sure enough, we know how this all played out. But this squeeze actually looks the best. So if you're looking for a trade idea, play IWM, play the Russell ETF long, because this one's setting up to actually look the cleanest for potential rebound and reversal higher. And if you think that, I don't know if that's considered a pair trade, but if you think, we're going to drop more, then just put some puts on the Qs, the QQQ. And then you can play, obviously, if it goes higher, you play IWM because that seems to be the strongest one as of right now. But it was the weakest down from a percentage standpoint. I think the lows, when it got down to here, I think the Russell was down, 21%, 22 at the most. And that's a pretty big drop for an index where everything else, I think NQ was, 15, 16%. The Dow, not much. I think it was, 5%. And the ES was roughly around 10, 11%. Might be rounding up by 1% or 2, but you get the idea. Speaking of the Dow, I don't really focus too much on the Dow. I'm going to say it probably looks pretty strong as well. Not as strong, and it still has that weekly squeeze. Definitely the momentum shift over the last 2 weeks is no bueno, but that's a massive squeeze. I mean, you're literally going on since August. So that's half a year almost. So something to pay attention to where that fires. So obviously that's not something you want to see play out. And the momentum shift is over the last 2 days. Well, technically 6 p.m. is one, and then technically today's, but that momentum shift is lower. But just like that, with that news that just came out, the market is holding up that gap up, and it's not continuing too crazy, but it is uptrending right now. So we'll see if that's a one and done. Oh, that was great news, and then it just fades into the overnight session. But like I said, it's really going to come more based on what the Fed does and what goes on with these geopolitical issues. But nevertheless, something to keep an eye on, these with daily squeezes on basically almost every index. But I will say the Russell definitely looks the best out of all of them. We'll end it on some of the stuff I personally did today, as far as maybe some stocks that you're not aware of, or you are aware of them but you haven't heard them in a while, because that happens to me sometimes. Like, oh, I love that stock, that's cool, but it's too expensive, and then you find out about it, you're like, oh shoot, that's right, and then it's 60% cheaper than it was when I liked it 2 months ago. So a potential idea that maybe there's a ticker in the end of this video that you might end up, you liked it, you read an article about it months ago, and then you're like, oh shoot, that stock's at what price? And the first one we'll take a look at is DNA, which I end up liking this one. Any of the I'm not obviously not a doctor or any medical profession, but anything that focus on potential, I don't want to say future tech, but just healthcare in general, like a lot of the genomic stuff like that your genes and just the testing and stuff that can be done, and tests that you can take maybe once a year that could potentially early warning signs, or because of X, Y, and Z you have a 87% chance of catching this. So the more information we have, the better we can fight that stuff. Obviously that leads to healthier people and so forth. So I'm real big into stuff like this, and I really like DNA. I think my average is like $8 on this one, and then sure enough, here it is at $5. And I was buying it before the merger. I think I had an initial core position around $9.50, $9.75, and it was looking good. It was at $16, up a good amount, and then just like everything else, kind of fading. So not that far from its all-time low at $4.34. Now in this market, I'll say, we might talk about DNA again in a month, and it could be a $4 stock or a $3 stock. That's just the market conditions we're in. But one thing I try to stress in the room is you have the information today. And if you look at this chart and you say, once again, rounding down and up, 16 at the high and $4 at the low, would you be happy with an average of $4.94 or $5 or whatever the case may be? 95% of people are going to say, yeah, I'm not at the very bottom, but that's nearly impossible to time the bottom and catch it. And then also I see the high, so I know, where the stock's range has been, and I'm on the lower range. So anybody buying a stock at 5 obviously wants to go to 10, 15, 20 and so forth. So, you have that information, you have to make decisions based off of that. Now you can always look at the numbers depending on what type of investor or trader you are. Well, I want it when it's under 5 billion or something, and you do the math, and that's when it's at $2.92. Well, then you can put a buy it to that price. Doesn't mean it's going to hit, but at least you have a plan. But for me, thinking 3, 4, 5, 10 years from now, I don't care if my average is $5 or $8. I mean, in the grand scheme of stuff, if this is potentially worth $50 or $80 or $100 a share, do you really care? If you had Apple from 10 years ago, do you really care if your average was $60 or $57? I mean, in the grand scheme of things, it really doesn't matter. So if you like something and it's at a good price, then have a starter position. Buy 50 shares, 100 shares, 250, whatever your, half of a position size is. And then obviously be aware that in these market conditions, it can get hit and it could go lower. And once again, that fight and flight mentality that, the psychology of trading is, you want to push through that. You want to be able to buy it cheaper. Like it is common sense, but when you have a vested interest in a stock and you're seeing your, P&L go from green to red, and mostly red as of late, it's tough to be like, what I want to buy more of this. And that's the issue, is people focus on the price and not the company. And what has changed with this company from it being a $16 stock to a $4 stock? During this time, nothing that I'm aware of that has caused the stock, to shoot up or shoot down. Thus, whatever the reasons is for you to get, invested in the company shouldn't have changed. Sometimes the stock and the company are two different things. I always use that example that in the .com boom and bust, Amazon went from $106 or whatever to like $6. So, it's a 90% drop. But now you look at Amazon and be like, wow, I would have loved to buy Amazon at $6, $7. And I'm not saying this is the next Amazon, even though there is an article that says this is going to be the Amazon of, different testing and healthcare and stuff like that. But my point is, if you got a 401, you got a retirement account, there's a lot of stocks that I think are even better and cheaper than they were. I mean, obviously this wasn't publicly traded back in March 2020, but a lot of the opportunities are even better because the overall market's dropped, 30, 40%. Some of these stocks are down, 60, 70, 80, 90%, giving you, I think, an amazing opportunity if you, like them. So that's just one to do your own research, go on YouTube and type in the ticker or Seeking Alpha or however you want to get the information. The other one's A-Firm, which I wish that it's dropped so much. I know their last report wasn't amazing, but the growth and the partnerships that they're getting, I mean, the initial pop over here was, or I think that actually it was over here on 8:30 is when it was announced, or was it the earnings? I think it was a little before that kind of lit that fuse for the stock to go from 60 something, 70 something dollars to 100 and maintain that and then just continue. And I think it was a confirmation of, the pay, buy it now, pay later kind of thing was going to be on Amazon's thing. And when you start looking at the percentage of how many people are on Amazon, like the numbers are crazy. I watched some video on it that was like, if 2% of people that shop on Amazon used A-Firm, they would make X amount of money. And then every 1% was like a ridiculous amount. You get to 4 or 5%, and you're talking billions of dollars, which was crazy to me. So that actually, funny enough, in the room, I was talking about keeping an eye on this company, not as a potential investment, but the better their numbers were, the more I think it was a red flag of people taking on more debt that maybe one day they couldn't pay for. So when you see these numbers rise, that 20% of people are doing, buy now, pay later, then 50%, then 60%, and then God forbid there is a serious recession or something, all that type of debt and stuff, I think that was going to be the best indicator, for potential pullback in the overall markets, was the better that they did as far as the numbers for pay now or buy now, pay later. I just figure that might be something to keep an eye on. But I like the idea. The business model is great. Some of the times, depending on how long you do it, if it's 4 months, there's sometimes no interest. Now, if you have to do a longer period, like 18 months, 20 months, 24, 36, whatever, there is interest on that and stuff. But it gives people obviously the ability to buy something, just like anything else, a car, a house, or whatever the case may be. You're paying less, but obviously there's typically a fee in that. So it's kind of a win-win. People don't have to come out of pocket thousands of dollars, but then also this company and whoever else they're using on their website gets typically a kickback. And obviously if millions of people are using it, then this business should do well. So it's just, I shouldn't say it's crazy, because this has been the MO for months now, that this went from almost $80 stock to trading in the mid 30s. So I nibbled today a little at 37.75. So we'll see how it goes. And once again, by nibble, I mean, I bought I think 20 shares. And then the other day I think I did initial core position at 42 with 50 shares. So I got 70 shares, I think, or 65 shares. I can't remember how many I bought today. I either bought 15 or 20. But, I'd be fine having 100 shares with an average in the mid 30s. So if it keeps dropping, I'm going to buy it, because, you're taking out, all of this. You're at all-time lows in the stock. And once again, yeah, the report wasn't amazing, but not to the point that it should drop by 70, 80%. It's just crazy how some of these stocks are dropping. So maybe you're not aware of, or where it's been trading. So hopefully this is one you can write down and check. Like I said, you have to go by the information you have right now. Could this be a $25 stock sometime in March? Absolutely, but we don't know. We just know that it hit all-time lows today, and there's been times where, was it TSP or whatever, same thing. I was looking at the exact same chart. This is before doing videos, but I was in the room, and I said, TSP was at $27. I'm like, this is the all-time low. You don't know where it could be tomorrow. This could be the low, and then sure enough, I mean, it's lower now, but the concept is that it went from $27 to $50, so almost doubling, almost up 100%, and I think it was 3 weeks. So that is funny that I literally I didn't trade it. I have calls on it now that are good till May, but that's a different trade idea. But my point is, you don't know that this 37.51 could be, I mean, it's a little lower after hours, but this could be the all-time low, and then you're going to look back if it goes up to 100, 150 and be like, oh man, I was watching it bleed and I just never pulled the trigger. So that's why I think it's good to nibble, have a core position, and then be able to add to it. You never want to do a full position right away because it could become the stock could go into the teens. You just don't know with this market. So another one, Surf. I think Kathy Wood has this one too. This one's been beat up. It's doing pretty good. I've been in it for a while, and it got up to like $7, $8, $9. My average was initially in the mid fives. I actually bought 100 shares today because I haven't touched it in a while. Getting my average down, I think, to either the very low fives or high fours now. This one, Cancer, if I'm not mistaken, a focus on Cancer. When you have like 75 positions, it's hard to keep up with every single one of them. I know the vicinity of what they do, but like, oh yes, they focus on the 1247 dash. Like that's, you do your research and then you buy and you look out for the future. That's kind of, I just keep it as simple as possible. But this is another one. It's gotten cheaper before. I mean, it was $1 stock, but it goes in these waves. I mean, even from before COVID, going from $1 all the way up to $14, that's an amazing run. So it kind of has the ebbs and flows like most things do. And, you could do Fibonacci from here to here if you want to kind of gauge over that, but I'm not really worried about it. It's just, once again, from a high of 18 to $1, having an average, we'll say like at 450 or 480 or whatever. Actually, I'm curious. I got my phone right here. I just like to have an idea. Where am I at now? 520. Yeah, I think my average was 555 before I bought those shares. So my average is 520. So obviously it's higher than $1, but it's way below 18. So finding that, right around here as an average, I think is fine in the grand scheme of the data we have on this stock, how far we can go, the highs to the lows of where it's been. Must have been traded, or maybe there's another ticker with this name before, and then they went private and then came back after 2011 and started again in 2017. But anyway, having this information to have an average around 520, if this thing drops to the low threes or high twos, I'll buy another 100 shares or whatever and get my average down to the maybe mid fours and just hold it, because as you see here, oh man, this is the end of the world. The stock's going to go to zero, and then boom, almost back to its IPO price or the highs from that. So you just never know. But if you like what the company is doing and it's fairly inexpensive, why not put 1-2% of your account into it and just see how it goes. Sometimes, to me, it's as simple as that. Another one I did now, which I finally have a full position in this one. I am a big believer, and this one actually hit a 52-week low today. I'm a big believer in these. Was it Joby and Archer? I don't know which one will be the one. Maybe they all merge together. Maybe one's the big winner, or maybe there's enough room for everybody. But a lot of these have had, I think Joby had a partnership, either Lilium or Joby had a partnership with Japan, and like a week later, I think it was Joby. And then South Korea. Basically, these stocks are eVTOL, so it's, electric vehicle vertical takeoff and land, which basically think of, an EV car, but it flies. And it's a taxi service from one point to the other. I think most of them are autonomous, so there won't actually be a pilot. So it's basically a autonomous flying taxi service, the Jetsons, if you will, which sounds super futuristic, but eventually it becomes just like a smartphone and any other technology we have. 20 years ago, wow, that's so crazy to think, so far back. Well, there's always going to be new technology that comes out, and I think something along these lines is the future. So whether it be, this one, I bought 25 shares, I think at $4.15 today. So like 10 cents from the lows or whatever. My average is still pretty high on this one. I think it's in the high sevens, low eights. Because I was buying it before the SPAC merger at I think 980 or whatever. So you have your core position and an average down a bit. I'm not going to be buying any more of it. I'm at a full position size on this one, but this is a good one, and maybe it becomes a $3 stock. Main reason is most of these stocks won't be doing anything for another 2 years. So most of them have partnerships and big deals with other contractors, and like United Airways and all these other companies, but most of them don't materialize until 2024. At the earliest. So, but I like the idea and I like these companies, so I don't mind investing in them and just seeing how it goes over time. This is another one which, out of all the space ones, probably my least favorite. Their launch failed. They were at was it Kennedy Space Center in South Florida? Well, I don't know if that's really considered South Florida, but Cocoa Beach area, and they were supposed to. They had a payload. I think for a satellite, or it was like 3 different universities or whatever. Anyway, it did leave orbit, but as soon as it detached and we were watching it live in the room, the fact that you could still see the feed, it was spinning like super quick, and I'm like, oh man, this doesn't look good. And sure enough, the stock had halted on the way down. I guess it was on it was a few days ago. Was it 210, or maybe that's when it was scrubbed? Because initially they tried launching it, and then it was like weather, and then they tried again, and it failed. The computer internally cut the launch, and then they tried again, and finally it did launch, and it did leave the orbit, but ended up losing whatever was on there. I think it was a satellite or some research thing. So not the best thing, but that's just how it goes. Anybody that follows SpaceX, they've had a lot of failure too. So it's a high risk, high reward. Once again, the way my brain works, I try to think of stuff that's not anything anybody talks about today, but I had that with Tesla 10 years ago, Facebook 10 years ago, and a lot of people weren't really talking about this stuff and then here they are now, trading at the prices they're trading, even with Facebook dropping this, you had an average in the 20s and 30s, you're still sitting pretty, even if it's a $200 stock. Tesla, geez, what, 20, 30, 40% from the prices back then. So, I like to say you only need 1 or 2 of these stocks to really end up doing well, to make it, if you want to look at it that way. Who's to say this isn't one of the major ones? Or at these prices, the way I look at it too, let's just say, they don't end up organically growing. Well, maybe SpaceX, they're probably worth under $1 billion here. Maybe SpaceX offers $3 billion, and maybe the stock goes to $9. And if you have an average of $3 or $4 or $5, it's not as exciting, because obviously you'll either get a payout per share or shares of another company, depending. But the risk reward as things get cheaper, this is a real company with a real product, and at $3, once again, the risk reward's there. Buy 100 shares, buy 500 shares, whatever the case may be, and just check on it in 2 years and 3 years and just see how it goes. Last one, Matterport. I was really excited once this thing dropped below, was it $15 or $14? I think I started buying some at 15, my first 100 shares or whatever, and now my average is the low 12s, high 11s, I think, and this thing has just gotten beat down. Earnings perspective, I don't know if this one shows the right thing. Yeah, okay, it does. Yeah, so it was they were expected to lose like 50 something cents. Was it? Let me hang on. I don't know why it went away. Yeah, so they were expected to lose almost 60 cents, and they lost 10 cents. But there was another one. I think that was it. Maybe it's a non-GAAP something. I can't remember off the top of my head. But their growth for people using their app and their other stuff was like 98% growth from last year. They had their highest revenue quarter, I think, ever. So there was a lot of good, and then I think the main reason why it ended up dropping was their guidance for the rest of this year was pretty conservative, with a growth of only about 10 or 12%, if I'm not mistaken. So I think that took some of the wind out of the sails. But once again, for you guys that don't know, Matterport, think of when you ever look at a house on Zillow or any of these other places like Redfin or whatever the case may be, and you want to do a 3D tour of a place. That's Matterport. That's the camera that they're using. And the reason this thing shot up to $37 was there was a lot of hype back in November when Facebook changed their name to Meta, and this was seen as a potential Meta play. And I agree, because I could picture kids. All right, guys, let's go to Paris today. And the kids, elementary, maybe my son, in like 5-6 years, they take out their headsets and they're in the metaverse, and they're basically touring, the Louvre, and they're seeing the Mona Lisa, because you can have these cameras everywhere and actually left and right and look up and down, and you're actually, seeing, and if it's, especially for those types of places, it could be real time feed. So if, you're actually there in a sense, and think of, courtside tickets to the game. You put the headset on, you're looking left and right and stuff like that. And obviously they don't have like the goggles and stuff, but I'm saying the technology they have, and they also have an app now where people can use their smartphone and do all this other stuff. So anyway, once again, at these prices, an all-time low at 620, maybe it's good to look at it knowing, from a high of almost $40 to a low of $6, maybe this is another one that you nibble at. And I don't know, I think the better, I'd rather buy shares of Matterport and a lot of these other ones than putting money in Apple. Is Apple a safer bet? Yes, but the returns will never be as good as if Matterport goes back to $30 something. I mean, you're talking hundreds and hundreds of percent return. I don't see Apple returning hundreds and hundreds of percent. What, Matterport could potentially do in 6 months, it will probably take Apple 10 years to go up, a couple 100% from where it's at right now. So I think the risk rewards there in a lot of these names. And I'd rather put, 2-3% here, 1% here, 5% here, and put money to work in these names than a lot of the bigger names, because, the bigger names were these names, Google, people were choosing Yahoo over Google and AOL and all that kind of stuff. And, why would anybody want an iPhone and all these other, why would you want Netflix when there's a Blockbuster down the road? People want to drive and get their, there's the disruptors, and whether it's the technology or the company, the management, the inspirational person like an Elon Musk, whatever the case may be, if you believe in either the product, the company, management, whatever the reason is, especially in this market right now. So I like growth stocks. I want to invest in something that, puts a smile on my face. Be like, oh, I own shares in this company and I think it's cool and I think it's going to be big in the future. Well, I love this. I love being able to buy stuff cheaper. Yeah, I'm already down 50% in Matterport in a matter of a couple weeks, but I'm happy with my average. Like I said, I think I'm in the high 11s or low 12s, and I think in the long run, it'll all plan out. So, and obviously you could be wrong. That's why you don't put all your eggs in one basket. But like I was just saying, I think I have 72 long positions now. And if you want a full list of that, it is on the site. Obviously, that's for members, so you can check it out at offthecharttrading.com and see a full list of everything I'm in. I try to update it at least once a week so people can see what I'm getting in and out of. Mainly don't get out of anything. Normally it's adding little bits, like I said, nibbling, and then obviously everything we went over tonight, I screenshot and put in trade alerts so people can see every single day exactly what I'm doing if I'm, buying and stuff like that. And that's typically, I know it's kind of funny and people probably like, yeah, it makes sense, but they don't actually do it, is you typically want to buy on the red days and, sell into the green days and take your profits. But with a lot of these longer term ideas, I think this is an amazing opportunity to buy this stuff and, just hold on to it for the long haul, 5, 10, 15 years. I think it could be life changing being able to buy some of these stocks at these prices. But anyway, definitely went a lot longer than I wanted. Kudos for you guys that stayed for all 37 minutes. The rest of you, shame on you, but you won't hear this. Anyway, I'm going to go chill with the familia. You guys have a wonderful night, and I will catch you guys at the next one. Oh, also, since I won't see you guys before that, keep in mind it is a 3-day weekend. The market is closed on Monday. So on that, have a good night, and I'll see you at the next one.